So this video is based on supply side policy and it's looking at labour market deregulation, especially with regards to trade union reforms. So these policies are designed to improve the quality and the quantity and also the flexibility of the supply of labour. So just to provide a little bit of a background of the trade unions within the UK, I know in some countries there isn't any trade unions present, but the UK have always had a history of trade unions. At times they've been very, very strong, but in recent times they've been quite weak. So the winter of 1978 to 79 was significant in trade union history, and it was known as the Winter of Discontent, with many of the country's unions striking over the plans to limit pay rises due to inflation. So the strikes had a dramatic effect in the UK. Trash piled on street corners during one of the coldest winter in years, and we had even grave diggers going on strike in Liverpool. And even when I speak to, for example, family members, they remember this year and they remember how bad it was in terms of the strike actions across different industries and how it kind of slowed down productivity within the country. Around this time, it was the lead up to a general election, and the Conservative Party obviously found this as a great opportunity to really kind of turn the UK against the unions and also against the Labour Party at this point in time, and they employed the Saatchi brothers. Saatchi and Saatchi to create a kind of advertisement campaign based on this, saying Labour isn't working, as you can see in the picture, and that was quite iconic. And actually, they believed that this type of advertisement, because they created a follow up when it was delayed, saying Labour still isn't working. And they actually believed that this advertisement campaign, it could have actually won them the election. So when the election was delayed from 1978 to 79, the Saatchi brothers came up with the other slogan, Labour still isn't working. And the Conservative Party, the treasurer during the election, claimed that the person who won the election for the Conservatives, and Margaret Thatcher, she won the 1979 election. And the Conservatives obviously stayed in power for the next 18 years until Tony Blair came in. Now, when Margaret Thatcher came in, one of her biggest arguments was about how destructive the unions were being. And she really took on the unions during her time in office, and she had many battles with unions across different industries, but especially the miners. So in that time, Thatcher's battle with the unions would continue, most notably during the 1984 and 1985 miners' strike. So the British unions lost a huge amount of power during Thatcher's time in office, and by beating the miners' strike in 1985, her government further demoralised millions of union members, and therefore again weakening it even further. The fact that Thatcher kind of beat the unions meant that the unions were not as feared and they weren't as respected, and people felt let down by the unions. And that was, I suppose, the initial steps to kind of weaken and dilute in their power. So further economic policies also allowed them to strip the unions of major strengths. So, for example, strike ballots were required by law. Walkouts were no longer possible, just a show of a hand in a car park, for example. Flying pickets, and what I mean by flying pickets is where you actually travelled to kind of be on the picket line for different industries anymore, and it was outlawed. And most importantly of all, a union's assets were at risk if there were unlawful actions taking place. So what she pretty much did, these trade union reforms, was kind of weaken the trade unions to prevent industrial action from taking place. And just as proof to how successful this was, we can see that membership fell from a peak of 12 million in the late 1970s to almost half that by the late 80s. So trade union membership levels reached their peak in 79 and declined sharply throughout the 80s, as we can see here, and early 1990s before stabilising from the mid-1990s to the mid-2000s. But still, you could argue that since Margaret Thatcher, trade unions have never been the same since. Now, the whole idea of reducing trade union power was because they believed that trade unions were counterproductive and they were obstacles within the labour market and they slowed down productivity. Because of the threat of industrial action, the constant bargaining and negotiation for labour rights, it slowed down what the firm could achieve. So they seek to make the labour market much more flexible to the ever-changing demands placed upon it by employers in expanding sectors, thereby reducing structural employment risks. There was also belief from supply-side economists that it enables greater labour participation. And it could definitely be argued that if you do, I suppose, reduce the trade union power, and you do kind of avoid the problems with industrial action, and you do make sure that actually employers make the labour markets much more competitive, that they don't have to go through lots of different protocol. For example, if they're dismissing a worker for poor performance, and they can replace them quickly, and they can replace them with better skilled workers, making it much more competitive, where workers have to work hard to stay within their jobs, then it should boost productivity. But there has been consequences of this type of policy, and sometimes there's been the argument that if you reduce trade union power too much, then it gets to the point where firms can exploit labour rights. Now, when the Great Recession took place and there was high levels of cyclical unemployment, because of how weak the trade unions were and because of how desperate people were to get back into work and get that income, it created this new kind of initiative from firms, which was known as zero-hour contracts. So this gave firms complete flexibility to employ workers whenever they needed them. So, for example, you could be working 5 hours a week if there was low demand and there was less needed to be done, or the next week you could be working 32 hours. It just completely depended on the demands of the business. Now, you could argue why that would be good for businesses, but it provides no security for the labour market, and it's really, really difficult for those labour participants to actually even budget their finances week to week, because they don't know when they'll be working next. So zero-hour contracts have been heavily criticised because of that, because they don't believe that actually they're giving enough, I suppose, protection to staff, and there were claims that major companies such as Sports Direct were actually completely abusing legislation with these zero-hour contracts. So, for example, they were actually making workers have searches before work and after work and not getting billed for it, and claiming that they were actually working the hours, so they should be getting paid, and they should be only getting paid for the hours that they do, even if they were in work, for example, half an hour before work and after work getting searched. So there's been a lot of criticism of these contracts, and you could argue, are they in place because trade unions are not there to protect workers and to kind of avoid these types of policies from taking place? The Bank of England have also recently said that they believe that the weakening of trade union power has actually hurt workers' wages. So the historic decline of the role of trade unions in the UK economy has held back British workers' pay. The chief economist of the Bank of England has warned. So in a speech in London, Andy Haldane noted that the share of the UK workers in the unions had declined from half in the late 1970s to just a fifth today. He said trade union membership has been associated with higher pay for workers of between 10 and 15%, and that the decline is therefore likely to have exerted downward pressure on pay. So using the long-run estimates, that will have lowered wage growth by around 0.75 percentage points per year over the past 30 years, which has been significant if you consider the amount of years that we're considering there. So because obviously trade unions are there to try to negotiate on behalf and represent workers' rights, if you weaken them, you don't have that power anymore, and you don't have that representation, and therefore there's less bargaining power for wages. And when we see the amount of wage growth that's taken place in the last 30 years, especially the last 10 years since the Great Recession, it has been worrying, and there's been an increase in, for example, relative poverty, living standards have fallen, and you could argue is a part of that to do with this policy that Margaret Thatcher did on trade unions.